Each Saturday, I come on here and explain the most important highlights of news that happened throughout the week and what it's done in the market and what it's about to do in the stock market, because that's what we care about as investors. This week, equity markets climbed, fueled by strong earnings and rate cut optimism. The Fed indecision created both opportunity and risk. Markets are currently pricing in a September cut, but a July cut remains a catalyst. Dollar and bond markets are reactive. The dovish Fed rhetoric weakens the dollar and boosts flows into equities and emerging markets assets. Tariff headlines remain a volatility variable. Earnings have overshadowed short-lived trade jitters. With companies like Nvidia and Palantir and other AI juggernauts just continuing to drive sky high, many don't know whether to buy, sell, or stay put. And Crypto Week happened this week, and Bitcoin hit an all-time high and might just be getting started. My name's Nolan Gouveia, my students call me Professor G, and I made this channel to make investing simplified. So this week was Crypto Week, and here are the highlights. This is an absolute historical moment for the crypto market and just markets in general. And so after I explain the highlights, I'm going to tell you exactly what I think is going to happen with Bitcoin and the price action in the short term and in the long term. So the Genius Act, which is stablecoin regulation, what it does is it sets the US's first comprehensive regulatory framework for dollar-peg stablecoins. It requires users, including banks and crypto platforms, to hold fully backed reserves in cash or near cash assets and publish monthly disclosures on reserves. All these things that happen this week within the Crypto Week at the White House specifically centers around this idea of regulation, and that is huge. I know that for crypto maximalists, we definitely don't want too much regulation. We don't want people or the government looking at or telling us what to do, but at the end of the day, without regulation, it's just way too risky. And if there isn't regulation or there isn't checks and balances or there isn't something similar to that in the crypto market and specifically for Bitcoin, then we're never going to get the big players. We're never going to get institutional style money to flow in. That's what they're all waiting for, and that's why this is so bullish for specifically Bitcoin. Trump signed the landmark crypto bill on Friday. The legislation, called the Genius Act, will be the first major law governing digital currency, establishing a regulatory framework for the $250 billion stablecoin market. Stablecoins are viewed as a relatively safe type of cryptocurrency since their values pegged to other assets like the dollar. The bill passed the House on Thursday with the support of 206 Republicans and 102 Democrats. Now, this is just talking about stablecoins, but like I said, anything that is happening in the crypto market that's positive is like a rising tide that rises all ships. The Clarity Act. The purpose for this is that it clarifies which federal agency oversees which crypto assets. It empowers the Commodity Futures Trading Commission, the CFTC, with authority over token-based assets while reserving Securities and Exchange Commission, the SEC, jurisdiction for securities, alleviating regulatory uncertainty. The next steps for this is that it's approved by the House. It's now pending Senate and presidential approval. Again, having this role definition is just very important so that we can start to figure out what are these assets actually defined as, and specifically how are they taxed. That's very important. Then there's the Anti-CBDC Surveillance State Act, and what it does is it blocks the Federal Reserve from issuing a retail central bank digital currency to the public. Reflects widespread Republican concerns over privacy and governmental overreach. The status for this is that it passed narrowly in the House, part of the 3-bill package, with Senate review to follow. So why the heck does this matter for the market? It boosts stablecoin legitimacy, which has clear rules and disclosure requirements which strengthen confidence. It clarifies oversight, placing digital assets under the CFTC framework reduces regulatory ambiguity and increases market certainty. It limits that digital dollar threat, and the market response from this is that Bitcoin surged about 20% from 100,000 to 120,000 amid optimism over the bills. As I've said before, this is a path to that institutional adoption. For crypto, this is the most significant clarity that we've seen around this space, specifically in regulatory clarity. This is going to increase institutional and obviously retailer interest, which we've seen already because the coin has jumped up so much. What I think is going to happen with Bitcoin is that right now there's just so much hype in the world of cryptocurrency, with the White House really being pro-Bitcoin by far. a bunch of companies really starting to use it and to talk about it, so it's a very popular thing now. I think that it still has room to grow. I think over these next 6 months or so, we may see it jump up to 150,000, possibly 200,000. I've seen a lot of analysts push it even further than that. But I do think that we still will have that cycle where it goes up a bunch, then it comes down a considerable amount. If you look back in the charts of Bitcoin, every 4 years it goes up a lot, then it drops, then it goes up a lot and it drops. We may see a little bit less of that cycle now that we have the ETF, and we have countries like our own in the USA that are talking about having it as a reserve currency. And that would be a huge deal, and what that would do is that would limit the amount of drops, I think. What it would do is it would keep it as stable as possible. And once Bitcoin starts becoming more stable, it's not as volatile as it was back in the day, that's when we're going to see even more institutional interest, and that's when we're going to see it really, really skyrocket. So as I've been saying forever, this is a buy and hold. This is something that I buy with the intention to really never sell. But when people ask me, should I buy into Bitcoin? I just tell them, look at it like you're going to buy this and not touch it for at least 5 years, at the absolute very least. The next biggest stories that are probably affecting your investing definitely center all around Nvidia and other high-flying tech stocks and even big tech ETFs like the NASDAQ 100 or SMH for semiconductors. Both have been going nuts over the past couple of weeks, and I did a video recently on the top 5 positions my private clients need to exit, where I explained certain spots in people's portfolios where they may want to pump the brakes, especially now in this environment. Some viewers thought that I was crazy to say to be cautious with Nvidia, but then a couple of days later, large fund managers and finance professionals started issuing the exact same guidance. This came out literally yesterday.
Now, is this the time to take some chips off the table or just ride this rally going into earnings?
I think for every individual person watching this and for every portfolio manager, unfortunately, I don't have advice that would cover the gamut of what everyone's trying to do. But one of the things that I think is very obvious is now is not the time to be getting more bullish than you were a month ago or 6 weeks ago. Now is the time to maybe say, okay, I've had a good run, I have a bunch of stocks that are up double digits in a very short period of time, and do I still want to have as much exposure as I did when valuations were lower and there was less enthusiasm priced into these names? And for some of you, you'll say, you know what, actually, I haven't thought about that in a while, but maybe I don't want to have a 5% position that just went to 8%. And it's not the same as saying, oh, we're about to have a correction, and I predict that it starts in 27 hours. It's just a recognition that this has been an amazing market to be involved with, and a lot of stocks have probably outgrown the original size that you put them on in your portfolio, and you might want to make some decisions right now about if today were the starting point, how do I want to be allocated going forward?
Joe, coming over to you. So far, very early goings, but earnings season actually going better than expected. The estimate was 5.7, so that's 6.5 according to LSEG. Right now, do you want to just continue to ride your winners into earnings, or is it time to take a few bucks off the table and reposition a bit?
You just kind of set an expectation for yourself, and you say, this quarter is not going to look like the previous quarter, and if I want to do some minor selling, trimming some positions, I have no problem with that, but I'm going to stay anchored with the positions that I have. I think the risk in believing that this is some form of an inflection point, number one, is that you are going to get that rate cut in the fall. The earnings, as you mentioned, Frank, are very strong. And then just lastly, I do a lot of pattern matching. If you go back, you have to remember we had the precipitous decline already this year. We had it in the spring. Go back and pattern match the period from spring of 2018 through the end of 2019. And you'll see that precipitous decline in the fall of 2018. On the other side of that, you had a very steady staircase move higher. And this pattern match to that time period is very high. That's potentially what we're setting up for right now. So I think you stay anchored and just set the expectation that maybe Q3 doesn't look as good as the prior quarter.
As I stated in my video, Nvidia or those types of companies that have been going crazy are not bad companies, and they're not ones that you absolutely need to get rid of fully. But what I am saying, and what they're saying in that last clip, is that people will absolutely be taking profits at this point, and that's not necessarily a bad idea, especially if you've profited big. But don't be surprised if we see a dip in the very near future because of all these people starting to take at least a little bit off the table. So in other news this week, the Fed rate debate has been heating up. We have people like Fed Governor Waller and Vice Chair Bauman both saying that we should definitely have a rate cut of at least 25 basis points in late July. However, the FOMC meeting minutes from June reveal a narrowly divided Fed, about half favoring cuts this year and half urging caution due to lingering inflation concerns. The market reaction was that the uncertainty is pushing expectations of the first cut into September, but talk of July easing has buoyed equities and softened the dollar, reshaping capital flows. I don't think that we're going to see a cut here in July, but I do think that there will be the possibility of at least a 25 basis cut in September. As you've probably seen this last week, it was kind of crazy in the market. It just seemed like everything just kept going up, and that was from record-setting earnings and economic data. US indices hit fresh all-time highs this week. The S&P 500 rose about 0.5% and the NASDAQ 0.7%. More than 70% of Q2 S&P 500 companies beat earnings estimate, with strength from staples, PepsiCo, to financials like JP Morgan, and tech, Taiwan Semiconductor. Now, it wouldn't be one of these videos without talking about the tariffs. There's some uncertainty around the EU and Mexico tariffs, which led to slight global market caution, though US equities remained resilient. And in other political noise, Trump renewed threats to fire Fed Chair Powell, which caused knee-jerk market reactions until he denied it. The tariffs are expected to be turned back on as of August 1st of this year, and so I'm watching that date closely and actually watching that week before very closely as well. If harsh tariffs are announced, we may see a dip, though I don't think it's going to be as substantial of a dip as we saw back in April. If you have money right now, you're looking to invest right now at this moment, I would say why not hold off for at least a week or two and just see what happens around that date. As a strong, educated guess, I would think that that would be the time that we would see a dip. Now, I'm not saying that that's for sure going to happen, and what I am saying is that I'm going to possibly hold off just a little bit of my investing until that time just to see what happens. But if it doesn't drop, I'm going to be totally fine putting the money in, even at all-time highs, for the 3-fund portfolio that I invest in, that I talk about all the time on this channel. Those are solid, broad-style ETFs that have been around forever and will continue to be around forever and are very resilient, as we've seen this year. I'm also looking for deals on the individual stocks that I've been really heavily investing in lately, like SoFi or Palantir or Berkshire Hathaway, with Berkshire Hathaway being in the solid value territory to me, since I'm buying in at lower than what I was a couple of weeks ago. Watch either of these videos to keep you going strong in your investing journey, and remember to keep investing simplified.